Hi there everyone and welcome to this edition of Market Fatafat. It's a busy show lined up for you. First up, let's take cognizance of Motherson Sumi. What have they delivered in the second quarter with their earnings? Well, you've got a profit which has come in quite healthy, 384 crore rupee PAT performance versus our estimates of about 350 crore rupees. You also have the revenue growth which has been fairly in line with street expectations. So that has come in at 15,924 crores and that's bang in line with what the street was suggesting. Their margins as well have come in at about 8.3%. You have the EBITDA at about 1319 crores and that seems to be far healthier on the margin front as well. On the EBITDA, it's been a healthy performance this time around. The Radial acquisition, growth in the PKC group, all of that has aided numbers and we'll be watching out for trends in their key businesses as well as the ramp up of some of their new plants. But that's the stock at 171. Well, let's get a move on then. Gulf Oil as well reported quite a healthy set of numbers. We've got Manish Gangwal, who is the CFO of Gulf Oil Lubricants, now joining in. Good to have you on board. It's been a sharp rise in your net profit figure, but the sales are flat. There's also that one-time adjustment. Walk us through the details.
No, so the quarter has been good for us, considering the overall economic scenario around and especially the slowdown in the auto sector we all have witnessed. We had a very decent quarter with revenues growing at 1% overall, and if there was a base effect of some institutional sale in the last year September quarter. So if we knock off that base effect, we have grown our revenues by 5% in our core volumes. And considering that industry has degrown in this quarter, we have recorded still a positive growth, and factory fill business, which is, the OEM's first fill business, where a vehicle, when they fill the oil while leaving the vehicle, due to production cuts by OEM, that sector has degrown sharply. And in spite of that, all other verticals except factory fill have recorded double-digit volume growth for us. So our past trend of double-digit volume growth continues in all other sectors, except that the OEM factory fill has slightly dampened the overall scenario. Having said that, the profits have been very good. We had maintained our margins, rather improved our margins in certain segments. And because of the Bazaar sales and in other B2B sales have been very good, the overall profit has shown a decent increase. And with the corporate tax cut, our net profit after tax has gone up by 54% to 62 crore, which is a record high number.
Mr. Gangwal, how is the volume growth this time and what is the outlook on your volumes?
We have been growing double digit, close to 12% CAGR over the last decade, and last year has been exceptionally well at 18%. So considering that, due to the economic slowdown in auto sector, we have grown slightly lower. Our core volumes have grown at 3% during the quarter. But that is mainly because the factory fill volumes have degrown, and if we knock off the factory fill volumes from base and the current quarter, we have grown double digit in all our other segments, close to 12% volume growth in all other segments.
So with auto sales in the slow lane, how are the lubes doing overall? What is the outlook going forward? How many more quarters of sluggishness will we see?
The lube sector, there are two ways of consumption. One is the auto sector manufacturing, the production, where the first fill volumes are impacted, and then the franchisee workshops where the vehicle come for servicing during warranty period. So franchisee workshop is growing still very good, double digit for us. And overall the industrial scenario, we hope that it picks up slightly better from Q4 onwards. And auto sector definitely, once the BS6 stabilizes, from April onwards, we see a sharp, good rebound. And for the next two quarters, we are quite, optimistic about other sectors other than the factory fill, that the overall franchisee workshops and industrial infrastructure, now that the season for infrastructure work has started, all those sectors should continue to grow very well for us.
Now, crude prices as well have been range-bound, and do you think this in light could impact your margins profitably going forward?
So crude has been quite stable, as you rightly said, around $60, and that has helped us maintain not only the margins, Thus also, if you see sequentially our gross margins have improved. Even YOY basis, our gross margins have gone up by close to 3.5%. So overall, stable crude helps us maintain our margin and focus on rather marketing activities. Also, slight depreciation in rupee in the last quarter has impacted partially the input cost, but overall with crude around $60, we are in a healthy state.
Thank you so much for taking time out and giving us a view on your earnings. That's the call on Gulf Oil Lubricants. Well, let's get a move on then. It's been a robust quarter for Dr. Lal Path Labs as well. There's been steady volume growth. Ved Goyal is the CFO now joining in to talk more about the quarterly performance. And certainly we have seen a strong quarter. It's led by volume growth. What are the factors that have contributed to this?
In Q2, we grew 15.1% in revenue, led by volume growth of 12.1%. And the best part, now Delhi NCR is 41% of our total revenue, which used to be 53% for a few years back. And rest of India, which is contributing 59%, is growing much faster, which is 19-20% of growth in value and volume both.
So volumes as well have been fairly strong. Can you tell us a little bit more about reducing the dependence on the NCR region and how that could, the outlook on your volume growth in light of that?
So our idea is to reduce our dependence on Delhi NCR, and that's why if you see our contribution from Delhi NCR is now only 41% compared to very high earlier. And rest of India, which is very bigger space for us, where we don't have much presence right now, especially in south and west, and the market is very big, where the growth is very high for us, which is 19-20% of revenue and volume both.
So I understand that the company aims to increase their presence in the tier 2 and 3 towns. Will this need a lot of investment? Have you slated out any sort of capex?
See, as a brand, we are very much available everywhere in the cities, like outside Delhi NCR also. If you see, our infra is widely spread all over India, and about tier 2, tier 3 cities, we are going into these tier 2, tier cities. Now we especially have a large high volume or revenue from Delhi NCR, which is base for us. But now if you see, we are going tier 2 tier cities, which is like Jabalpur or Satna or Pune and all these cities, which is the next target for us.
So can you talk about the unorganized players feeling the heat of the growth because costs have gone up?
See, in my view, unorganized is shifting towards organized. If you see, our share, which is 59% from rest of India, has come from unorganized to us. It is not that we have taken share from somebody organized player like us, because we don't cross each other's territory. So this is where we are trying to take the share from unorganized to us, and that's we have seen small labs right now where they are becoming a partner with us, or in some sense, or like if they can become my collection center or my partner, where I can do testing for them instead of they are testing, because this makes sense for them, where they also feel that it is a price value equation for them also, where they can provide better services and competitive rates to their customer, where we can provide what the quality and the accessibility and the convenience in testing, which is our core.
So do you think that the B2B and B2C space, which is seeing more growth, is likely to now pick up traction?
You're right. Our B2B and B2B split is 60-40 right now. The B2B is growing faster because next what we are doing, we are opening more and more collection center where you don't require testing everywhere. Our model is where we can have hub at a place where we do testing, and spoke, which is collection points. So going forward also, I do believe that more growth is coming from B2B as compared to B2C. Having said that, the area where we have B2B very high right now, we are now getting B2C, because if you see East, where right now we have more B2B, but going forward, as our brand is very strong, it is a very well-known brand now, so B2B, B2C is also increasing fast.
And tell us about the PE player, the funding in the sector, that seems to have dried up. It's led to pricing for existing players. What is the outlook here?
Honestly, we haven't seen any new funding from private equity. It was very high, especially after our listing, which was 15-16 was the year where everybody was putting money in some regional chain labs or regional standalone labs. Right now, for last 2-3 years, we haven't seen any new investment. And because if you see, last deal was done in 2016. After that, I am not aware that there is any deal which is happening here.
All right, thanks so much for taking time out and joining in, giving us a view on how things are shaping up operationally, the B2B space as well as your volume growth. Healthy gains on the stock, 3% higher. Well, what's the market mood as we stepped into a truncated week in the midst of earnings? 11,885, a cool off after last week's rapid bull run. And currently, the rise with India small case is reflecting a level of about 568 unchanged. Lots of fervor within the broader universe. Let's take a quick break and come right back for more. Thanks for staying on with us. This is Market Fatafat, circling around the 11,870 mark for the index, as the mid-cap index is holding out quite smartly in trade. But there was a lot of hectic action on the political arena as well, as the Mahayuddha is headed for a climax. The clock is now ticking for the Shiv Sena to stake their claim. Remember, just earlier this morning, there was news that Arvind Sawant has quit the Modi cabinet, fulfilling the NCP's first demand. Meanwhile, the Congress as well has gone into a huddle. Sonia Gandhi chairing a key meet in New Delhi in order to discuss whether the party will back the Sena NCP government. Let's delve more into this. My colleague Disha joins in from Mirror now with the latest updates. Disha?
Well, that's right. The NCP's core committee meeting is underway here in the city of Mumbai. Sharad Pawar, the NCP chief, is heading that meeting right now. He is addressing to the core committee members. We saw Praful Patel arriving. We saw Supriya Sule arriving. And at this point in time, the meeting is underway. There were two conditions that the NCP had put forth before Sena if the latter wants the support of the NCP in concern. First and foremost, the Sena has to break all the ties with the BJP in concern. They have to come out from the NDA government, and the lone minister, Arvind Sawant, who is at the center, he has to resign. So that first condition has been settled by the Sena, is what we believe, because Arvind Sawant announced on Twitter that he will be resigning because that is best with the interest of the party in concern. So that is the first condition that the Sena has settled of the NCP. The second most important point, what is happening, and the agenda, of course, of the core committee meeting is the fact to discuss about the common minimum program. That is the second condition that the NCP had put forth before Shiv Sena in concern, that there needs to be a common minimum program. What will that be? That is something which has not been disclosed by both the parties yet. And lastly, the NCP also wants a proposal from the Shiv Sena, and only after that the decision will come in by the NCP chief that whether the party wants to extend its support or not. And it's very important to note here that it's not only NCP's viewpoint, because Congress also is of the utmost importance here. The party which had 144 seats in the elections, it is in alliance with the NCP. So the NCP also wants to take the Congress party of view in actually going ahead and whether supporting Sena or not.
All right, thanks very much for keeping us abreast with the latest. So perhaps 7:30 is when we will have more clarity. As of now as well, the Congress has huddled into a meet. Well, let's get a move on then and focus in on Market Fatafat, a whole host of stocks that we'll try to squeeze in over the next 10 minutes or so. It's lots of earnings reaction. So let's first up take it across to Soumya to find out what kind of a quarter Equitas has delivered.
Well, Aman, this was not really a great set of numbers that Equitas reported. In fact, the stock's tracking close to about 4.5% today on back of these weak set of numbers, particularly on the bottom line. Even though the NII grew by over 27.5%, the profit line contracted and saw a degrowth of over 20%. In fact, not just this, even the asset quality saw a decline with GNPAs and NPAs ratios increasing by 13 and 9 basis points respectively. Even the disbursements remained sluggish and were down over 10% on a sequential basis. If I talk about the AUM, it was a good growth, decent growth of around 33% on a YOY basis, driven by small business loans and vehicle financing. Not just this, even the net interest margins improved for the company. But given the fact that the other microfinance institutions were able to report good growth, this one was little disappointing on the profit figure.
All right, watch out for Equitas, currently down nearly 5%. Let's get a move on then. Lakshmi Vilas Bank, that stock is quite cheery in today's trading session, holding out by about 4%. After the kind of rough ride it's been through, Ashish, what is the undertone of the chart suggesting?
Hi, good afternoon and good morning. And Lakshmi Vilas Bank has been in upper circuit for quite some time. The outlook remains positive, but at the same time, I would advise to probably refrain from here, because if there is a lower circuit, you will not be able to get out of the stock. But someone who is okay taking risk might consider going long on the stock. Keep a stop loss of 19.70 on the downside for sure. The stock has already run up towards the target levels. I would use this as a buying opportunity for target of 21.40.
All right, watch out for Lakshmi Vilas Bank, target 21.4. Meantime, it's been a fairly disappointing quarter for Ashok Leyland as well, that delivered its quarterly earnings. In fact, you had the revenues coming in, nearly halving to 68 crore rupees. The profits as well have come in at about 39 crores, and that was a big blow for Ashok Leyland. Not just that, the operational performance as well has been quite disappointing, and it has reported a 93% decline in its profits. Remember, there was a one-time loss component of about 64.8 crores in the quarter gone by. You do have the management saying that the industry has seen a decline in volumes of nearly 53%, and they too have seen a significant drop this quarter. Despite that, though, they have seen EBITDA growth of about 5.8%, but remarkable recovery actually. That stock price was in the doldrums when it opened for trade. It's recovered and it's managing to hold out by 0.5% despite this quarterly performance. Noteworthy there on Ashok Leyland. Next up, at number 4 then, it's damaging news for Sun Pharma. Vivek, what exactly happened?
Well, you're talking about Sun Pharma. What's actually happened is that one of the ex-employees of the company has gone ahead and made a couple of allegations against the company. What she is saying is that the company has indulged in practices that are not allowed by the US federal law in terms of how they are, resorting to off-market promotions of a couple of very important products. She also said that she wasn't given fair treatment at the company. We at ET Now reached out to the management of Sun Pharma. We asked them for a clarification on the same, and what they told us was that they completely denied the allegations. They said that they would be rigorously defending themselves against any such lawsuit, and they also said that they continue to perform or conduct business at the highest ethical level. Post the ET Now news flash, the stock recovered from the day's low, but still 1.5% lower is what you're looking at in terms of Sun Pharma.
All right, that stock continues to remain under a bit of pressure. Moving on to the big Economic Times headline, Max Financial, Hero could be looking to buy some stake. Let's get in Soumya with more perspective. Soumya.
Well, yes, that's right, Aman. After the deal of stake swap between Mitsui Sumitomo and Maxfin were called off, we have latest development wherein Max Hero could be buying close to about 10 to 15% stake in Max Financial. Well, the promoters particularly have a very high number of pledged shares of around more than 90% in Max Financial, which is definitely weighing down on the stocks. And in fact, Max Financial is a holding company of the Max Life, and now what we gathering from the ET reports is the fact that Sunil Munjal may become a co-promoter along with Anarjeet Singh and would make an open offer to the public. With this, we might see Anarjeet's shareholding coming down to 10%. Now let's see how this development pans out, but as of now, the stock's under pressure.
Indeed it is, at 472, down about 2%. As Soumya said, these are just unconfirmed reports. Let's move on then, and Shriram Transport is another stock that's in focus in trade today. In fact, the stock is building onto its gains. Ashish, is this a buy?
Yes, absolutely. See, Sriram Transport found a very strong support around the zone of 1107 and reverse back from there. So I think we can again move higher towards the level of 1200. So one can create long positions here. Maintain a stop loss of 1107 for the target of 1200 over short term.
All right, keep an eye out on those levels, 1135, that's where the stock is currently at. To number 7 then, and it's Bank of Baroda that delivered quite an impressive performance. In fact, their profits grew nearly 73% at 736 crore rupees. The NII growth as well has been healthy at 7,027 crores. The gross NPAs have, the overall asset quality has seen an improvement, 10.25%. Provisions have increased a bit on a yearly basis to come in higher at about 4,209 crore rupees. That's the latest on BOB. The stock as well holding out quite smartly in today's trade, a nice bump up of 4% nearly. Well, let's get a move on then and focus in on the next stock in focus, and that is Amara Raja. In fact, let's understand, Vivek, what exactly has been the quarterly performance, because that stock is on a tear.
Well, Avan, if you recall, that was our Dhamaka earnings for this day. We had told our viewers, early morning, just before market open, that, watch out for this particular name, and it's not disappointed at all. Numbers are extremely good. All the revenues are down, mainly on the back of the fact that fresh OEM demand is slightly subdued, but the replacement demand is something that's come in extremely robustly. Margin expansion has been significant, almost over 350 basis points, on the back of the fact that number one, lower lead prices was something that aided, as well as a better product mix was something that aided. On the back of that, profitability went higher by almost doubled on a year-on-year basis, and brokerages at this point of time are busy upping their EPS estimates, and they believe that the guidance that the management said, and which a lot of people actually felt that given the slowdown they wouldn't be able to match, they believe at this point of time the guidance most likely would be adhered to. So Amara Raja, definitely so far stock of the day today.
Oh yes, indeed. The Dhamaka earnings, that's what's firing up the stock in trade. Moving right on then, let's also talk about an impressive set of numbers that's been delivered by Narayan Hrudale, and look at the stock, Samya.
Well, yes, that's right. The numbers were clearly impressive. The stock price is soaring today in trade. Well, talking about the sales figure, it was up by over 16% to nearly 828 crore rupees. Not just this, if I talk about the EBITDA, it saw a good growth of over 68% with improvement across both the domestic and Cayman hospital. Not just this, the company saw good utilization levels, and this was also reflective in the margins figure, wherein it improved from 13.8% to 15.4% on a YOY basis. Well, talking about the profit, it was particularly very impressive here, 236% of growth to nearly 45 crore rupees. So very good set of numbers by Narayana Hrudale, and we're seeing the stock price also soaring today in trade.
Yes, indeed. Thanks very much for that. And with that, we're out of time right here on the show. Thanks, guys, for joining in and sharing with us all those buzzing stocks. We'll take a quick break and be right back for more. Stay tuned to ET Now.